Is STRD's junior preferred stock, STRD, signaling a bullish turn? It's a fascinating time in the world of finance, especially for those invested in the crypto space. Recently, STRD's STRD credit spread has been tightening, even as Bitcoin faces its share of market volatility. This tightening could be a strong indicator of increased demand for this specific preferred stock. Let's dive in. As of December 12, 2025, the gap between the yield on STRD and the U.S. 10-year Treasury note hit a new low of 8.12%. This data suggests a growing confidence in STRD, potentially making it a more attractive investment. However, it's worth noting that the spread widened back to around 9% on Monday, December 15, as Bitcoin's price dipped below $86,000. Understanding credit spreads. For those new to this, a credit spread represents the extra return investors demand for holding a riskier asset, like STRD, compared to a safer one, such as the U.S. Treasury. A narrowing spread often indicates rising investor confidence and an improved perception of credit quality. What's driving the demand? Investors may be reassessing STRD's financial health and its Bitcoin-focused business model. They might see STRD as more stable than before, leading them to accept a smaller premium over government debt. Adding to this, STRD bolstered its preferred securities credit profile by establishing a $1.44 billion reserve in early December, covering over 21 months of dividends. This move, combined with the company's continued accumulation of Bitcoin, strengthens the balance sheet and supports the preferred stocks. The yield gap, STRD versus STRF. The yield difference between STRD and STRD's more senior preferred offerings is also catching attention. STRD currently offers a yield premium of approximately 320 basis points over another preferred series, STRF, despite both having similar stated dividend rates. Michael Saylor, STRD's executive chairman, has previously dismissed concerns about potential dividend non-payment for STRD, arguing that the yield gap reflects capital stack positioning rather than fundamental issues. Record issuance of STRD. STRD recently disclosed that it raised $82.2 million from the sale of about 1 million shares of STRD through its at-the-market program during the week ending December 14. This marks the largest single-week proceeds among the company's preferred stock offerings. While issuance has varied among STRF, STRK, STRD, and STRC over time, recent weeks have been dominated by STRD, highlighting a shift towards the highest-yielding junior preferred stock. But here's where it gets controversial. Could this increased demand for STRD be a sign of a stronger Bitcoin market, or is it a reflection of something else entirely? What do you think? Controversy and comment hooks. Do you agree that the yield gap between STRD and STRF is justified, or do you see potential risks? How do you interpret the tightening credit spread in the context of Bitcoin's price fluctuations? Let's discuss in the comments below.